welcome to Ensuring Success 2023. This is session 5. We hope you've been with us all morning. We're starting up our afternoon sessions, or late morning if you're on the West Coast. But in any case, we want to thank everybody for being here with us, and I hope you're enjoying all of this that we're presenting for you. We can present 14 hours of continuing education credit for free because of our amazing sponsors. And they include ADP, Avalara, BotKeeper, Canopy, Instead by Corby, CPA.com, eFile4Biz, Relay, WriteWorks, SafeSend, SureLink, Wolters Kluwer, Xero, and Zoho. So if it weren't for them, we wouldn't be here. So thank you to all of them so much. Okay, and then also I want to explain briefly for those of you who may have just joined us how CPE works. We do some polling questions, but those aren't related to CPE. They're just for fun. But we will stop the session 3 times, and each time we'll show a 3-digit code on the bottom of the screen. And you need to record that. And in order to make sure you're paying attention and watching the screen and calling attention to that code, you will hear this sound. Okay, and that's a reminder that you need to write down that code. And then when you're ready to get CPE certificates later, you can come to the CPE credit area of our website and enter your codes for every session you attended and download your certificates. So that's how that works. So I'd like to introduce our panel for this session on cryptocurrency and how to talk to your cryptocurrency clients. And our speakers for this session, we are joined by Dr. Stein Smith and Mackenzie Patel, sorry, and my co-moderator, Alexandra DeFelice. I really threw myself off on that. Sorry about that. So I'd like you each to introduce yourselves briefly.
Afternoon, everybody. Stein Smith here, and I'm on the faculty at Lehman College back east in NYC. And on top of that, I've been very active in the blockchain crypto asset space since the back half of 2015, and I also have a column at Forbes each week. Happy to be here, Gail. It's an awesome event. Happy to be joining you today.
Thank you.
All right. Hi, everyone. My name is Mackenzie Patel. I'm the CEO and founding partner of Hashbasis, a crypto-native accounting firm based in San Francisco. So we've helped businesses with their crypto accounting, crypto tax, and also subledger implementation needs. A subledger is basically just crypto accounting software. And we've been in business since about February of this year, so still relatively new, but it's been so fun getting to work with all of our crypto clients. They're very complex, but we work solely with crypto businesses, and we love them. So thanks for having me on, Gail.
Sure, you're welcome.
And I'm Alexandra DeFelice, Director of Marketing and Business Development for Payne & Fears Law Firm in Southern California. I am co-moderating with Gail today, and I am taking audience questions as well as polling questions. We encourage you to enter any questions you have for our panelists, and I'm also the designated bell ringer to make sure you all get CPE.
All right, and speaking of entering questions, you can enter any questions you have for our speakers, or if you're having any technical difficulties or just want to give us a shout out in the Ask a Question box on your screen that appears right below the video window that you're watching us in. So please feel free to connect with us there. So we're going to launch this session with a question.
Yeah, so right out of the gate, all over the board, people have different perceptions of crypto, which I'm sure you guys know, yes. Especially for those of us who don't even know what it is. So the questions, the options are, what is your perception of crypto? It's a scam. I think the technology has potential, but it's still in its early days, and no one is using it yet. And it's as revolutionary as AI, which, again, as a reminder, we will be doing session 7 later today. So we launched that poll, and we are going to see, guys talk a little bit, and then we'll see what the audience has to say about this.
Okay, so while we're waiting for the audience to talk about their impression of crypto, when you have clients, and now there's the tax return issue that you're supposed to answer on the 1040, whether or not the clients are dealing with any kind of cryptocurrency. How do you launch a conversation with clients about crypto?
I'll go first on this one.
Sure.
And honestly, sort of the overall point that I always try to hammer home is that I have to understand what exactly the client is doing. If they are involved in crypto, what kind of crypto are they involved in? How'd they get it? And then how are they tracking that, right? Both on an everyday basis and on a year-over-year basis, right? Because that can really address and then really sort of help us better educate ourselves and our clients as to how this whole process is actually going forward.
Yep, so luckily at HashBasis, we pretty much just work with crypto clients, so we have a whole checklist that we go through, and it's all just crypto questions that I pepper these leads with, if you will. So yeah, definitely agree with Sean's point. You have to understand the nature of the activity that your client's gonna be doing on-chain. So are they doing DeFi? Do they have NFTs? Are they high-frequency trading? Are they validators? Are they miners? Like, you gotta figure out what they're actually doing, and it can be one of those things, or it can be all of them. And so that's the fun case there. So you really just need to go back to basics and be like, what are you doing on-chain? And then I typically ask some other things as well, more so on the accounting side, like do you have a crypto software system called a subledger set up? So do you already have that? What does your tax software look like? And is that integrated with your ERP? So like QBO or something. So
Okay, Mackenzie. I sat next to Mackenzie at dinner last night, and she's like, you know what's going to happen? I'm going to have all these words and acronyms, and I'm going to go crazy because I like love crypto, and I'm like, I'm so passionate about it. So we need to go over. You just listed a whole bunch of things, and I'm like, wow, these are totally over my head, and some of the audience members are like, oh, what did she just say? So let's go back and say, okay, what are the options? What did you say? You said there was different kinds. What are the different kinds? And what try to spell out the acronyms for the audience.
Sure. So first one I mentioned was DeFi, which is decentralized finance. And so think of protocols you might have heard of Aave or Compound, MakerDAO. Basically, you can take your on-chain money, your crypto, and you can do something with it. You can invest it, you can lend it out to people, you can earn returns on it. And so that's a really big umbrella, which we call DeFi or decentralized finance. And we find that a lot of our customers are on that.
Okay, I got it. DeFi, decentralized finance.
Yep.
Okay, what else?
The next biggest one I would say is NFTs, which stands for non-fungible tokens. And so this is just a different type of crypto asset. Think of like a JPEG file, like a piece of art, but it's just tokenized and it's on-chain. And so we can have NFT platforms, or maybe you have a customer that's just purchasing NFTs to buy them. Maybe they'll sell them later for a profit. So we do see that, but it's more so like in the arts. We see that happening a lot.
Okay.
Yeah.
Awesome. Thank you.
And to just add some extra background there, probably for anybody out there who's not a crypto expert, the best way to get introduced to DeFi is to basically try to think of a bank running entirely on blockchain, but has no infrastructure or any of the legacy costs of a bank. Basically, DeFi is that way, as you were saying, to unlock some of the value in your tokens, to either earn interest, make investments, or to otherwise put that on-chain money, tokens basically, to use, to actually generate other forms of income.
Yep, and just one point to kind of drive home there, when you're doing crypto accounting or trying to advise our clients that have crypto, you really have to do kind of a lot of your own research. And so I find that half my day is just researching what my client's doing. It's not even really doing the accounting, it's just trying to read the source documentation, watch any YouTube videos, and then once I gain the understanding, then I try to relate that and be like, okay, what's the debit and credit here?
Yeah, excellent point there, that a whole bunch of the current issues out there, and obviously we're going to go in depth on some of those here today, but a big part of it is this lack of education and really understanding as to how these tools actually work, right? NFTs, DeFi, stable coins, all of these acronyms and new forms of trying to transfer money from party to party, those have to be learned, right, by us and our clients. And a big part of the value add, I think, trying to help clients understand their own tax obligations, for example, is to have them understand what are the fundamentals of the asset actually being talked about.
Yep, and I think the best way to gain that understanding, like, yes, you can read the docs, but just try it out for yourself.
Exactly. Yeah.
So, like, spin up your own crypto wallet, take, I don't know, $20 and put it onto a DeFi protocol and just see what happens. Because then you can really, like, then if your own money's in the game, like, you really will understand what's going on.
You're always more interested then.
Exactly.
And get some skin in there.
Yeah, so definitely do that.
Okay, we're going to talk about how to do that in a minute, but we're going to display the first CPE code for this session on the screen. Okay, so be sure to write down this number if you're planning on collecting continuing education credit for this session.
And actually, since we're just doing that, would you like to hear the results of
Yes,
our
I would.
Yes.
poll?
Let's hear it.
Okay, so the choices were it's a scam, I think the technology has potential, or it's revolutionary as AI. 42.4% said B, I think it has potential.
Okay, good stuff.
30% said as revolutionary as AI, and 28% still said it's a scam. So please, this is like
28%. We have to work on you guys.
keep this in mind as we're kind of convincing them to put some crypto in their wallet and all of that.
28%.
28%. I mean, that's
lower than I thought.
I was going to say, yeah. I was going to say half of them are going to say it's a total scam. scam. So I'm actually pleasantly surprised.
Me too. Me too.
Okay, and just so as sort of a side note, if somebody wanted to get started easily with their $20 and just have some skin in the game, what's
Want to go first?
the way to do it?
Sure. So I always tell people, number one, set up what we call a MetaMask wallet, and it's just a type of crypto wallet, and you can use MetaMask on the Ethereum blockchain. So there's all different blockchains that are out there. You might be familiar with some of them. Bitcoin's the most famous one. Next to that, you have Ethereum, and so I definitely recommend setting up a MetaMask wallet. You can just Google MetaMask, make sure it's the right link and not a scam link, because that happens. And you can set up your wallet, and then you can, the next step is to get on-ramped via an exchange. And so an exchange is just where you take your US dollars, your fiat, and you're converting it to crypto. So a famous example is Coinbase. Definitely recommend getting an account there if you're interested. Then once you buy the crypto on Coinbase, you can then send it to your MetaMask wallet. Think of like a bank internal transfer. And then those assets are now sitting in your MetaMask wallet, and then you can just connect that wallet to whatever protocol or DeFi project that you want to interact with.
Yeah, and the awesome thing now in 2023 is it's so much easier, as opposed to 2018 being here for the first time talking about crypto and blockchain. It was a much more hands-on process to get on-ramped into crypto, right? To basically get onboarded into it. And Coinbase is obviously the household name for folks trying to get into crypto here in the US, because it's the only registered, publicly traded crypto trading platform in the US, but there are other options out there too. MetaMask, great option, but just a quick caveat on that, Mark Cuban actually lost, I believe it was $1 million
It was a lot.
by downloading the wrong version of that software. So PSA, always be sure to make sure that the actual software being downloaded is not a corrupted version.
So how do you do that? Because that's scaring me right now.
Well, I mean, so the best practices that I always try to advise is to basically treat crypto or hot wallets, basically those online app-based wallets, the exact same way as if you're handling your banking information, stock trading, right? Because ultimately, crypto assets are a technology, but they really are financial instruments for the average person. And so that's the best practice I say, because obviously each person is different, antivirus software is different, and each protocol is different. But the overall piece of advice is to treat it as seriously as if you're handling cash. And then also just another quick point there, PayPal is also a great option to get folks into the crypto space and to do so in sort of a more comfortable way, right? Using PayPal that has all of the guardrails and all of the comfort of PayPal, while also dabbling into crypto.
Interesting. So out of curiosity, I did launch this poll to ask, before we get into whether their clients use it, to ask the audience if they personally have a crypto wallet. And 50% said no, and I never will.
Never will?
Never will.
Okay.
I mean, I don't know. Maybe you can get one convert after.
I was going to say,
try for one.
One person.
35% said no, but I'd be willing to create one.
Okay, opportunity there.
And 14.8% said yes, and I have at least one wallet.
Okay, 14%?
Yeah, that's pretty decent.
Higher than zero? All right.
It is higher than zero.
14.8%. So.
Yeah.
Okay, so how do you explain to clients that crypto means lots of different things?
So, that's all part of that sort of checklist or sort of question list that any client handling crypto really has to be asked, right? Sort of, okay, so you have crypto. What kind of crypto is it? Right, because crypto assets, it's a very broad term like AI or like pizza, right? There are all kinds of pizza out there. But the real point here is to understand which individual type of crypto is involved, right? Because Bitcoin is different from Ethereum, different from stable coins, from non-fungible tokens, or from DeFi transactions. So that's really the first part, and I always try to bring content, right, to help my clients understand, like, okay, so DeFi means this, NFTs means this, and so out of all of these categories, which one of your tokens fits best into which category? Basically, again, it's about us educating our clients to make sure that all of us are on that same page to help them handle other conversations, be it tax-related or other business operational.
So, Sean, and then there's some questions rolling in. I know that we provide some resources for folks that we're going to provide at in a couple of weeks. Is this like, do you, in the definitions, do you have like a definitions resource, or is there a place where they can go to kind of delve into what that is? Very basic.
Yeah, so I know Forbes Crypto has a evergreen part of their website, and they write
Forbes Crypto.
Forbes Crypto has a evergreen part of their site. I've published some articles there where basically it's just introductory stuff, trying to define and outline what terms mean, and then how these crypto assets are different from each other, and then also resources like CoinDesk and Cointelegraph are also great places to find some of that evergreen stuff to help add some context to these conversations.
Mm-hmm. And we're also including the hash basis.
Yep.
Yep. We wrote an article at Hashbasis with some resources, but I can tell you the way I learned about crypto because I think it was really helpful. I started with the basics. So there's a Bitcoin white paper and an Ethereum white paper. The Bitcoin one is super short, but it's really concise and kind of beautiful, honestly. So definitely recommend reading that. The Ethereum white paper is not as short. It's pretty long and kind of intense. So I read those two papers, and then I watched a ton of YouTube videos. There's this person called Crypto Casey on YouTube, and she has really great introductory videos.
Crypto Casey.
Crypto Casey.
Okay.
Yeah, she's awesome. So I paired those two together, and then things just started clicking a lot more. So that's what I did.
And the Bitcoin white paper, it's online for free at bitcoin.org. Easy to find.
I love they grabbed that domain.
I know it's awesome. And it's so short, but it's so concise. And the first 5 or so pages, don't worry, are more of a narrative background on blockchain and Bitcoin, and it's only those last 2 or 3 pages that get really hardcore on the programming stuff. So
okay, so because you started talking about these basics and the differences, do I have some time to ask a few questions that are related to that came in already? What is a digital wallet versus cold storage of your cryptocurrency?
Excellent question, excellent question. And so that is one of the top 3 things that I always try to cover with any client. And the best way to boil it down is a hot wallet. It's an app on your phone, right?
Okay.
Be it Coinbase, MetaMask, any of these hot wallets, they're either app-based or they're web-based wallets. And so it's easy to use, convenient, we're all familiar with that type of interface. But they're also easy to hack. And so that's where most of the breaches and the hacks of blockchain or crypto that have happened primarily driven via hot wallets. Cold wallets are offline customized hardware whose whole purpose is to hold on to private key or other related information connected directly to your crypto holdings. And so it's not as easy to use or convenient on an everyday basis, but it's harder to hack. But also a quick PSA, there have been cases where cold wallets have come with embedded malware in them that gets activated once they're connected to a computer. So as always, it's always good to do your homework on the cold wallet itself, and also on the cold wallet manufacturer.
What would be a red flag? This wasn't a question here, but since you talked about it, and there's all these things about people trying to spam you with this and that, people trying to take advantage of every situation. How will you know? Like how do you? What's a red flag to go? Oh, this probably isn't right. Something's wrong with this site or this.
Yeah, so there's a communication application called Discord that a lot of people in crypto use. And so you can pretty much tell when you're getting a spam message because someone will always ask you to send them money. They're like, oh, I need help, donate to my project, connect to this link. And then usually if you click that link, they ask you to connect your wallet address, but really they're able to intercept your wallet and basically grab the secret password, and then they can just drain your funds from there. So if anyone's ever asking you to, one, send them money, or B, to share your passphrase or your secret code to your wallet, then that's a scam. Don't fall for that.
And and absolutely, anybody asking you, be it an institutional player or an individual asking for your private key seed phrase, never, ever, ever hand that out, right? Because that's your way to access your holdings, and by handing that out, you're basically handing over any tokens in that wallet. And also just other sort of quick PSA there. Any wealth advisor, tax person who is only taking payment in crypto and only crypto, that could be cause for at least pause, right? Because obviously I'm pro crypto, but but I'm happy to be paid in dollars also, right? As are most entrepreneurs, I'm sure. And so any person out there or any institution that's only taking payment in crypto or is demanding payments in crypto could be cause for a second look.
And just to share a quick story just on the importance of your private key management. So when you set up a new crypto wallet, they're going to give you your private key, which is like your password to unlocking the wallet. Be sure you're really securing that private key, because I have a friend who recently got his wallet drained because the seed phrase was compromised. And he didn't connect to a sketchy website, nothing like that. It's because he put the private key in LastPass, the password manager, and LastPass had a hack, and that was breached. So I recommend write it down on a piece of paper, put it in a safe, put it at a lockbox in a bank. So you just got to be really careful where you store those secret phrases or those passkeys, because if someone gets access to them, your crypto is gone. And
so having that paper with your private key stored at a bank, that always strikes me as kind of ironic, right?
Yeah.
Crypto was built to upend the banks, and now we're storing our private key data at the banks.
But just your point, the UI in crypto not being as excellent as it could be right
exactly,
now. But it's still early.
The user interface is still evolving.
Yeah, definitely is.
There's several questions about the difference between Coinbase and crypto wallets, and if I have Coinbase, do I still need a MetaMask wallet?
Yeah.
How do you want to conquer that?
Do you want to go first on that one, or?
Yeah, so if you just want to have a Coinbase wallet, that's okay, because you can put your cash into Coinbase, you can buy crypto assets, and you can hold it on Coinbase. Just know that they are essentially custodying your assets, and so they ultimately have control over your assets. And that's, if you're fine with that, if you're fine with taking that risk, then that totally works. When you bridge your assets to MetaMask, that's when you actually have full control and what we call self-custody over your assets. So it really just depends what your risk tolerance is, what your risk appetite is, and if you want to fully own your assets, or if you're okay with a third party, mostly having ownership over them.
And excellent point there, Mackenzie, that that opportunity to have self-custody over your own assets, that's something that's really unique to crypto, right? Because fiat currencies, stocks, bonds, those options don't exist, right? All of those funds have to be kept at a trusted third party, be it Chase, Vanguard, or any other TradFi firm. But in crypto, you have that opportunity to then basically say, okay, well, I want to hold on to my assets. I want to self-custody those and to basically control my assets and hold on to them on my own, which is a opportunity, but it also can be riskier for some people if they aren't familiar with those differences. But yeah, Coinbase is definitely an option. Coinbase handles everything for you. So in that framework, Coinbase operates like any other broker-dealer.
So where are we with regard to regulation?
How much time do we have, Gabe? How much time do we have?
36 minutes.
36 minutes. Okay, so that's just enough to just start the conversation. So regulation here in the U.S. can be best described as a patchwork effect, right? That there hasn't been any comprehensive laws passed out of Congress, and so it's fallen on the different regulatory agencies, right? The SEC, the IRS, and all the rest. But then that gap has basically allowed agencies, the SEC mainly, take point on trying to regulate by enforcement. And I'm sure all of you have heard of the lawsuits against companies failing, and then after the fact, the SEC sues them. And so that regulatory environment can be best described as murky at best, right? And there aren't too many hard and fast rules out there in terms of compliance purposes. And then on the auditing side, accounting side, there isn't really too much out there yet either. That right now we are still in the home stretch of passing the first GAAP standard for crypto asset accounting. So there is progress being made, but it's been awfully hard to make forward progress. Items like FTX and Binance have not helped, but I would say it's murky and sort of hard to work with right now.
Mm-hmm. Yep, just to, I guess, dive into some of the proposed regulations that we do have, though. So the one that's getting a lot of airtime right now is the IRS and Treasury broker regulations. So basically more defining who would be a digital asset broker or a digital asset middleman. And so there's a couple of different parties or entities that they have defined under this. So if you're a centralized exchange, a hosted wallet provider, or a digital asset payment processor, you could be called a broker under these new regs and be subject to reporting requirements. And so the big thing everyone's talking about now now is Form 1099-DA, and DA stands for digital assets, and so it's similar to a 1099-B or a 1099-K. And so if you are deemed a broker, then you're required to collect a whole bunch of information about the customers that are using your platform, and then give your customers a copy of that 1099-DA, and then also the IRS a copy. And so this is a huge change in the industry because they're requiring these would-be brokers to collect a lot of information. So taxpayer's name, TIN, address, and also just records of any digital asset transactions on their platform. So like what's the cost basis, what's the proceeds, what's the gain loss, and even things like they are proposing that you have the UTC timestamp hours, minutes, and seconds. So they're getting very specific in this reg. And you think about it, like a lot of the players in crypto now are just startups, and they might not have the runway to now stand up all of this reporting infrastructure. So people are talking about this a lot.
Yeah, and adding on to that, right, because all of that is a huge burden being placed on these players. And on top of that, one of the biggest issues is actually trying to calculate tax gains or tax losses, right? Because, right, and I won't bore you all too much, but the core of the issue is your point, that most every player out there in the space that could possibly be caught up in this very broad definition of a broker don't have the back office capabilities to actually track trades on a token-to-token basis. So most taxpayers are either going to be stuck using first in, first out, incurring large tax obligations, or conversely then having to go through and manually sort out the information on the DA 1099 and their own personal records, and then work through it manually on the back end. So either way, it is not going to create, I don't think, too much more accuracy in the space. Rather, it is going to be a burden. And the IRS received over 100,000 comment letters on this upcoming rule change. So it's obviously a major issue in terms of tax people out there trying to sort of have the IRS understand that even though these rules could be made to help to improve transparency, aren't really going to do that.
And in addition to what you mentioned, so there's all those issues, but then there's duplicate reporting. And also, I'm not so sure like the cost basis reporting is going to be accurate, because let's say you're on Coinbase, but you're also on Binance, you're also on MetaMask, you're also on like a million other blockchains. You need to put all this data into one centralized database to accurately calculate your cost basis and thereby your gains and losses. And so if like it's just not going to be correct if one entity or one exchange is giving you, oh, like here's your data, when the cost basis might be calculated incorrectly. So I don't know how relevant this information will really be.
Going to find out, I think.
Yep.
All right, we would like to take a second to display our second CPE code on the screen. So be sure to write that down if you're planning on collecting continuing education credit for this session. And can we talk a little bit about, so say you have a tax client, and that client is holding some crypto in half a dozen different places, you know, and they've come to you and it's time to do their tax return. What are the challenges that you're going to have as the tax accountant in trying to deal with all that?
I think a handful of the issues, just to sort of start the conversation, is trying to get that information out of all of those either trading platforms, wallets, DEXs. Trying to get that data is always a challenge, right? Because big players like Coinbase are sort of on board issuing this information, but not every player is. So one, having that information. Two, we're trying to reconcile transactions, basis levels, trades, swaps, offline transactions, on-chain transactions. We're trying to reconcile all of that is a massive headache for their whole companies out there whose whole business model is doing just that. And then three, trying to work with your client to make sure that as you're doing all of that, working through all of that, that both you and your client understand why it's happening, and two, understand how to not have this be such a headache going forward, to put it simply.
Yep, and just to add to that, I think wallet completeness, I really want to underscore that. There's been so many times where I find a new wallet that a client had, and I'm like, hey, is this your wallet? They're like, oh yeah, I forgot to add that to the list. So it's like, basically, you forgot to tell me how to, like, another bank account. And so that happens all the time, and I find another wallet, I add it. But I do have the worry that what if there's other addresses out there that I'm also forgetting? So that's an issue.
So are there questions that you can be asking your clients related specifically to this when you're before you start preparing their return, things that they might not be thinking of. Like, I mean, if we're talking about real money, like no one would forget that they had 5 bank accounts or something like that. That's just not like.
You'd be surprised.
Are they just not understanding the severity and the necessity to report this kind of thing?
Well, I think in crypto, it's really easy to spin up a new wallet address. So they might just spin up 10 and then forget that they spun them up. And also, you can have the same wallet address, but on multiple compatible blockchains. So there's a blockchain called Polygon. There's one called Arbitrum, Optimism. These are all like related blockchains, but they're distinct. And so you can have the same address on all these different blockchains. And so maybe they gave me their Polygon address, but they didn't give me their Optimism address, but they did have activity on them. And that's when it gets to like the intake questionnaire, like tell me like what addresses do you have? And then only when you get into the reconciliation, then I can kind of tell, hey, something's missing. Because maybe I see a random outflow, but they're like, oh, I don't remember. I was like, oh, so you didn't pay a contractor, you didn't do X, Y, Z. So then maybe when I see that, I'm like, okay, maybe you do have a related wallet address.
So you said that you stumble upon another wallet. How does that happen?
I just see a transfer out or a transfer in that looks atypical, and then I go to the client and I ask them, is this yours? And usually they do some digging on their side and say yes or no. So it's a very manual, iterative process right now.
I think that really highlights how easy it has become to your point, roll out some new wallets, airdrop some tokens, dabble in some NFTs via games or OpenSea or any other platform. And so that's also part of it, that's not every taxpayer understands that NFTs are actually money too, right? And so that's part of it too, right? Trying to work through all of that, and again, trying to make sure that sure, we're having a conversation about crypto or about NFTs or stable coins or DeFi, but that it's all money, and so that our conversations have to be treated as such.
I think it's so easy to just download an app, and you don't think of that as a bank account or a brokerage account or anything. It's just like, I got Robinhood, and I put some money in it.
Trading Bitcoin back and forth.
Right, yeah, it just doesn't seem like
real.
Yeah, so I could see people just not intentionally, but just neglecting to share that information because they didn't think of it as a
exactly
taxable asset.
So I have one question from the audience and then a question from me about that. The audience question is, what's the minimum amount to issue a 1099 DA?
Have they? I don't know if they've even set the minimum amount.
I don't think there is a minimum.
But that's a good, we were talking about the AICPA. They released a comment letter, and one of the things they said was a de minimis rule. So you'd have to have, I think it was $500, like a minimum amount of that before you issue a 1099 DA.
Okay.
There is none for now, though, so any trading amount,
anything's for you.
You're going to get one.
So. Okay, and then just because in other sessions we were talking about voluntary disclosure, if through no egregious means of your own, you didn't mean to forget that you had extra wallets hanging around, and you want to tell the government that you forgot to do this, is there a process by which you can do that?
There is a process now, just anecdotally through my experience, that's really treated right now, at least, on a case-by-case basis. But the IRS is pretty forgiving if you come forward voluntarily. Now, conversely, if the IRS goes through their copies of tax records and in your tax return, and there's a mismatch, and they're coming after you directly via their letters, which they've sent out, what, 40,000, 50,000 letters to taxpayers, to varying levels of, anger, basically, right? Either asking for payment, asking about this transaction, or saying, hey, buddy, you owe us 20 grand in taxes, pay it up now. So it all depends on how voluntary your voluntary information actually is. But just anecdotally, the IRS has been pretty understanding if you do come forward in good faith, and they aren't coming to you first.
If you don't check the box on your tax return, and you've got money in crypto, has there been any penalty or any case law on that?
So if you asked 100 tax pros that question, you would probably get 200 answers, right? and there are people who say, well, if your only digital asset activity is buying crypto using US dollars, you're probably fine not checking it. I'm of the point of view where any activity connected to any digital asset, I always say, go ahead, check it, yes. But I don't know off the top of my head if there have been any cases where the IRS has come after anybody for not checking that box. I'm sure there are going to be, but I haven't heard of any anecdotally myself.
Yeah, neither have
Mackenzie, have you?
I. And that box is pretty new. And I think this year on the 1065 and also the 1120s, they're introducing that box as well.
Okay.
So they're getting more serious on the business side.
Okay.
Yeah.
So we have an item here, one of the key points we wanted to cover that I don't even understand what it is. So just gonna,
Great, perfect.
just going to read it. So regarding the crypto accounting landscape, how do you advise clients on setting up a back office subledger?
Want to first on that one?
I can take that
First say what that is.
Yes, so a crypto subledger, or its crypto accounting software, it's essentially a database that houses all of your on-chain transactions, and then it layers accounting functionality on top. So essentially it's taking all of your on-chain transactions and then affixing a debit and a credit to it, and then you can run reporting on it. And so there's a bunch of different tools out there right now. There's ones more for individuals, ones more for businesses. But if your company has digital asset activity, you really should get on one of these crypto subledgers, because it's going to automate the calculation of cost basis, all your journal entries, and then usually they can sync your journal entries from your subledger into QuickBooks or whatever your ERP system is. And so it's more for automation and tracking, but also reconciling, so making sure the assets that the report says you have are what you actually have in your wallet. And so if you're going through an audit, for example, like you need a subledger.
Okay.
No, and to just add on to that, so the whole point of that whole back office subledger is to help map these transactions and tokens that are happening be on 25 different wallets. Basically, one, gather all of that information. Two, organize it, try to reconcile that automatically up front, as opposed to us doing it all on the back end. And then three, to your point, trying to sort of make it make sense, right? And there is different ways of doing crypto accounting on-chain, UXTO and all the rest, but then having to translate that sort of foreign language into debits and credits, that's the real value add there. And again, there are multiple firms doing that, but the whole value add is to try to make that process easier and to help crypto get better integrated into the business for payroll purposes, paying suppliers, paying vendors, and to have it all be mapped out correctly, which is a big headache anyway for entrepreneurs, even using fiat.
And I think it also helps align your accounting policies to what you're actually doing with your digital assets. So principal market pricing, for example, is a big thing in crypto, which says you have to pick the price from the market that's most advantageous to you, so whatever has the most volume and that you have access to. And so in a lot of these subledgers, you can pick what market you want to map to a certain asset. So let's say your ETH, you want the price to come from Coinbase, or Atom, you want it to come from Binance. And so in that way, you can be pretty fully US GAAP compliant, even though you have crypto and there's not a lot of standards on that now. So things like that, or your 606 revenue recognition policy. So it's just a good, again, database to house all of your activity.
More questions rolling in. Can I take them?
Yeah, go for it.
Okay. Just follow up on a different 1099-DA related question. It said, blockchain has been historically used to report sales of cryptocurrency on client tax returns. Would a 1099-B now potentially include a 1099-DA portion for cryptocurrency transactions?
So as far as I understand it, and I'm not the IRS person here, but as far as I understand it, the point of the 1099-DA is to phase out 1099-B reporting out of brokers like Coinbase due to the issues we had outlined before, cost basis mismatching, double counting, and to try to make a more customized form just for digital asset transactions. So I believe that's the intent of this whole change.
Okay, we have more questions, but I think we need to take a third CPE break. Should I ding myself? Or I think Mackenzie can take
Can
one.
I?
Yeah.
Okay, all right.
Okay. All right. Time for the third CPE code. So be sure to write that down if you want continuing education credit for this session. Okay, before we go to other questions, the one thing that probably most people in our universe have heard of regarding cryptocurrency in the past year is FTX. So can you give us just a quick summary of what happened and what that means to any of us?
Sure. So FTX turned out to be giant fraud. Bankman-Fried, criminal, he was found guilty. So in terms of how it's connected to blockchain or crypto, it honestly really isn't. any of the charges that were lodged against him and that he was found guilty of don't have anything to do with tokens, blockchain, or anything crypto. Frankly, the industry had the bad luck to have FTX be sort of the poster child for crypto with advertisements and endorsements from celebrities and athletes. But basically, it ended up being pretty cut and dry. Criminal activity, Ponzi scheme, and fraud.
And yeah, just to add on that, so FTX was it's a centralized exchange, right? And so it's not like the normal crypto we have that's decentralized, autonomous, permissionless. Like all the DeFi stuff was okay. It's really the centralized players that are kind of giving crypto a bad name right now.
Yeah.
So yeah, I totally agree with your point. It's not really crypto, it's centralized crypto, which is not true crypto.
It's having no controls, no CFO, no corporate governance, and having basically this whole $30 billion enterprise controlled by a handful of people.
And on QuickBooks.
Living on QuickBooks too, which was fascinating, I thought.
Yeah, nothing was. I think their Ask My Account
Nothing against
section
QuickBooks,
had so many transactions. Yeah, it's ridiculous.
Yeah.
So many questions. I love it. Okay, so what software do you use to accumulate the data necessary for preparing the tax return?
I think that's just the crypto subledger software. And so there's really a bunch out there in the market right now. But the first thing that I do is ask, are you an individual or are you a business? Because there are enterprise geared softwares and then individual ones. And then you need to look at, for the specific subledger, what blockchains do they integrate with? And by that, I mean, what blockchains do they automatically sync in data for? And you don't have to manually upload it. So try to find a subledger that has a high overlap between they automatically sync the data in, and I just have that activity as well, because that's going to automate a lot of the process.
Can you list a few subledger softwares? And someone was asking if there's any free ones out there.
Oh, free?
Free ones? I don't.
TaxBit was free, but they just have an enterprise product now.
I don't believe there are any free ones out there, but that most of them do have tiered pricing depending on the users, blockchains being synced, or the number of the transactions. But yeah, there's CoinTracker, Bitwave, and I'm blanking on
Cryptio, Integral, Trace, there's a ton of them. And the I guess rule of thumb is that the individual softwares tend to be less expensive. So I think Coinly is like $70 a year.
So just get it for one person versus getting it for your firm?
It depends,
I think depends
on the volume.
situation.
If you're doing it as an individual, sure. But if you're running a firm and you're doing payments in crypto, then you want the enterprise version. And also you are going to want to figure out, are you doing it for tax purposes or for GAAP purposes or for both? Because all that will
I guess most of these questions are coming from the perspective of the CPA that is having to do it for their clients, right? And so if they're not familiar with this, just like with any technology, is there a way to test it out without having to invest in the enterprise package?
I think some have free trials, or if you talk with the enterprise softwares, they'll give you a demo account that you can use for a couple weeks and make a decision.
Okay, cool. Okay, more questions.
I love it.
I knew this was going to have a lot of questions. So some of them are a little out there, so I don't know if I want to get. Is crypto a currency or a capital asset?
Oh man, that's a great question.
Well, are we talking under GAAP or tax?
Are we talking about
question? Interpret as you will.
Are we talking GAAP, tax, or like actual life? Right, because all three are going to be different.
I guess I can break down, but at least from like the GAAP and tax perspective. So under GAAP, digital assets are indefinite life intangible assets, and so that means they're subject to impairment. So that's on the GAAP side, and then on the IRS side, or on the tax side, crypto is property, and so all the property rules apply.
Yep.
So it's
Except
not
for staking. Except for
Yes.
staking, which is a whole other conversation.
But that's not cash.
Yeah.
No. It's not considered currency yet.
No.
Can you discuss the decentralized nature of crypto and advantages as to asset protection from government seizure or oversight?
Ooh, wow. I love it. So
That's a good audience.
That's a good one. Yeah. So in terms of the decentralized nature of crypto, pretty much the only crypto that is still decentralized is probably going to be Bitcoin, right? Because even Ether, after the merge and all of that, that's become pretty centralized with all of the staking operators and all the rest. But sort of that global decentralized way, now that only works trying to keep it out of government oversight and all the rest. That only works if you are storing it on chain and not on a platform like Coinbase, right? Because Coinbase is basically a financial institution at this point. And so that's really sort of the paradox here, that crypto has this image as being decentralized, unregulated, unsupervised, whereas actually most of it is.
And just for more context there, whenever a new protocol or new DeFi application launches, typically there's a labs entity, and so that houses all the engineering talent, and they're the ones that are actually building the protocol or the application. And then usually they also have a separate foundation entity, maybe offshore in Cayman's BVI, and that usually houses the tokens. And so, or the tokens are issued under the foundation just for regulatory purposes. And so I agree, it definitely is more centralized in the first place, but ultimately their end goal is to become more decentralized. That's what they all say is their end state.
Okay, if you're a business that accepts crypto as payment, what kind of accounting issues do you face?
Want to go first on that one?
Sure, our Hashbasis does accept crypto, but even before the accounting issues, I usually do vet the asset that the client wants to pay in, and so I look at the founding team behind it. What does the liquidity, the volume look like? Like, basically, is it a legitimate asset that I think is going somewhere? Because in that case, you're almost getting to like equity in that point if you're accepting payment in an asset that's not a stable coin. So I definitely do my due diligence first. I don't just accept any token. And the second piece is really getting the infrastructure up and running. So let's say I accept stable coins. How am I going to accept them? Am I going to create a centralized exchange account like Coinbase, Kraken, or Circle? Or am I going to have a MetaMask, which we call an EOA, or externally owned account, or externally owned address? And so that's the second part, is figuring out where am I going to store these assets in a way that's secure and that won't be drained by a random hacker. So then the third step is then setting up that subledger to make sure everything's all being tracked in. But then you get into fun issues like crypto AR and AP. So if I create the invoice in QuickBooks, and then I get paid in crypto, how do I marry and true all that up? So there's a lot of fun can of worms right there.
Adding some extra context to that, and it's good to add some definitions, right? Stable coins are tokens backed by a current asset, usually the dollar. So basically, that's their point, and stable coins are basically out there to be used as currency. We're going back to that earlier question. That's the token or that class of tokens that's actually being developed to be used as a medium of doing business. And then, adding to your points, right? Where are those tokens going to be held? Right, so that's a very fundamental question. But if you, as a enterprise or a client of yours, is saying, okay, going forward, I'm going to take payment in USDC. Where do I hold it, and then how do I modify my internal controls at the company as to who has access to those coins? How do I set up that wallet, like you were saying, and then do I want to implement a multi-sig wallet solution where two or more people have to authorize access to those funds? And so, basic questions from a entrepreneurial point of view, but questions that do get more complicated as you add in crypto. And stablecoins are the easiest option, probably, but there are plenty of other options out there too.
Exactly.
Since people are always asking about resources, we had an audience question about where do people get your crypto news? Because just like with a lot of these other sessions, people are like, the biggest thing is education, staying on top of all this, right? So the options were, and if you guys have more to add, or you can tell me where you get your news, is Reddit, X, TikTok, and what news? I already said it's a scam. Just saying.
TikTok? Wow, I've never used TikTok.
TikTok's dangerous for this stuff, though.
Yeah, like you might get false news on there.
There's a lot of bad information out there.
Yeah.
Reddit experts or influencers, there's a lot of bad information out there for sure.
Yeah, I definitely go the podcast route. So Unchained by Laura Shin is a really good podcast. Bankless, they're like a crypto media conglomerate. I read them a lot.
We're going to add these to the resources, I think. Yeah. So what are they? Unchained is a podcast, and what else?
Bankless.
Okay.
It's also a podcast, but there's articles. It's like a whole media production company.
Okay.
Yeah. What do you?
I would say probably the two sources I go to are probably Bloomberg Crypto, right, on their website. And every Tuesday they have a half-hour show on this topic, bringing in experts to analyze trends out there. And again, CoinDesk, Forbes Crypto, and really just and CNBC Crypto World are great sources.
CNBC
Crypto World.
Okay.
Oh, and I have one shout out. So there's a crypto accounting podcast called the Accountant Quits podcast, and the host interviews professionals in the crypto accounting space. So if you want like that type of news, it's amazing.
Cool. Okay.
Awesome.
So, and we are going to send out, when we send the video of this session, which will be within the next couple weeks, we're going to send out also a resource sheet, which will include places where you can go for additional information.
All right.
So, you mentioned hot wallets, cold wallets. We're not sure what the difference is and what's best for your client.
Yeah, so echoing back to that earlier conversation, right? Hot wallets are online web-based applications, right? Like any other app on your phone or a online portal, right? So they're easy to use, convenient, but they're also pretty easy to hack. Cold wallets, again, are those customized pieces of hardware. And so if you're talking to a client who is actually transacting in crypto and doing it on an everyday basis, getting paid in it, paying suppliers, doing payroll even, then they are going to want to hold a higher percentage of their overall funds probably in a hot wallet to use it on that everyday basis. Whereas on a tax client basis, if that individual is buying crypto during the year,
Investing.
Investing in it, then probably a cold wallet works better, right? To have it offline storage. But it honestly does depend on the client and how they're using crypto.
Mm-hmm. And one product we didn't talk about so far was a custodian. And
yes.
so custodians are actually really cool because you can, it basically splits your private key. So the custodian has one piece, you have one piece, and then maybe another trusted third party has a piece. So a good example is Fireblocks. And these custodians are really good at internal controls. So you can set up like approval workflow. So if I, as like a staff accountant, need to pay a contractor, I can initiate the transaction and then maybe the CFO approves it. And then once they approve, then maybe the CEO approves it. And so I think it's just really great that you can have internal controls, but also the wallet security, and they have pretty good UI as well. So really great.
Time for a few more questions, or did you have something that you wanted to ask?
No, go ahead. We also have the results of your poll.
Oh, yeah.
Let's
do it.
You're not going to like it. 61.5% said, "What news? I already said it's a scam."
Oh, wait a second. That doesn't
It's like 14%
that doesn't
at the
reconcile with the
beginning.
earlier answers, people. Come on.
Just say. 19% said Reddit, and 15% said X, and 3.8% said TikTok. So watch out, people. Just letting you
Accountants are
know.
not on TikTok.
Just like the theme of everything else, we need to be checking our sources, right? Okay. So we got 2 more minutes. So let me find some good ones here. Are you converting the crypto to dollars, or are the forms strictly based on crypto worth?
Can you repeat that? So when you get crypto, do you convert it?
Are you converting the crypto to dollar? It says money, so I assume that means dollars. Or are the forms strictly based on crypto worth? I guess crypto value.
Oh, for the
for the
tax
10
purposes,
yeah.
Okay.
Those are all dollar-based forms. Yeah.
Okay.
Yep.
Is it easy to convert crypto back into cash?
Oh, definitely. Especially on the stablecoin side, if you use an application like Circle, you just it's one-to-one. You just trade it. It's pretty easy.
Okay, since we only have 1 minute, there's literally like 5 or 6 people that are like, why can't I just use cash? What the heck do I need to do this for? And you said you were going to convert one person, so Sean, I'm going to ask you the question first.
Okay. So money isn't cash. Money isn't coins. Money is a medium of doing business. And more, don't forget, 80% of all dollar-based transactions are already virtual. So basically, all that Bitcoin is, or stable coins, or crypto at large, is that next step in money. And so it's going to happen anyway. It's faster, cheaper, instantaneous, fees are lower, and I have access to my funds instantaneously. Wires, don't need them. ACHs, don't need them. EFTs, don't need them with crypto. And so that's the real message here, is that crypto isn't a bubble. It's a technology improving money and the transfer of information between individuals and entrepreneurs. So that's the real value pitch here of any crypto.
Wow, that was excellent.
Oh, thanks.
Yeah.
Can you top that, Mackenzie?
Well, I just have one other thing to add. Crypto is just one use case of blockchain. Blockchains can be used for so many different things, supply chain, in the medical field. And so it's a really amazing technology. It's a globally distributed ledger that anyone can contribute to. And why wouldn't we move towards that?
Thank you.
right.
That was great.
All right, thank you so much. This was a great session. We hope you learned a lot and probably came away with more questions too. So this was super. We will be back at the top of the hour with our next session. Meanwhile, thank you so much for attending, and we will see you soon.